Hi everyone, I'm Jackie and we are enjoying life's journey on the path to financial freedom. Welcome back to the channel. So today I wanted to talk about all of the different checking and savings accounts that we have. I'm also going to talk about what bank I use because I know some people were interested on how I can have so many different bank accounts, okay? If you've been following the channel, we are on Dave Ramsey's 7 baby steps. We're getting ready to start baby step 4. He believes in using what is called the cash envelope system. So if you watched before, we used to use the cash envelope system, and lately people have been noticing on my budget videos that we have different accounts. So today I wanted to talk about what the difference is between the two. When did I decide to transfer over? Why did I decide to transfer over? How many accounts do we have? What are they for? And who did I learn it from? Okay, so real quick, this is my DIY cash envelope system that I had. I just got this little thing at Office Max for like, I think it was 50 cents or something like that, and I made my own little dividers. So the cash envelope system is actually really good when you're first trying to get a handle on your spending. I still utilize it every once in a while, but the biggest thing for that is taking things out that you usually overspend on: groceries, gas, eating out, buying clothes, household items, things like that. Basically, you budget out how much you want to spend, for the month, and then I like to budget out every single week. It kind of helps me keep things in order, or every single paycheck. Now we get paid, my husband gets paid every week, so we budget out every week. So then I know when he gets paid, at the time you'd say, okay, I have $70 a week for groceries, so he just got paid. I'm gonna go to the ATM, I'm gonna take my $70 out. I have $40 for gas that week, I'm gonna go to the ATM and I'm gonna take my $40 out and I'm gonna put it in here. Well, if you have cash and you're usually going over budget, a good way for the cash envelope is to help you from overspending. So you go to the store, you only have that $70. Obviously, use your calculator while you're shopping and try to calculate it before you get up to the cash register. But once you get up to the cash register, say you forgot to calculate sales tax and it ends up being $72. Guess what? You have to put an item back because you only have $70. So this cash envelope is really great when you're first getting started and you need that visual and you need the feeling of the money. Once you have that money in your hand, it becomes a little more personal, and so you don't want to spend it as much, or like I said, if you run out of the cash, you're out of the cash, and that's that. So it's great to get started. Let me talk about where I learned about the different accounts from first. So T. Harv Eker, he wrote the book, The Secrets to a Millionaire Mind. I actually watched one of his workshops where he talks about having how much of your paycheck to allocate to different areas. And he actually brought up the point about having all of the different accounts. So he recommended that you have an account where all of your income comes in. Then he recommended that you had an account where all of your necessities, all of the bills came out of. He recommended that you had a different savings account for your long-term savings. You have a different investment account for your financial freedom savings, that you had a different account for his and her money, that you had your own accounts, and all of this stuff. So he recommended that you have all these different accounts, and so it helps you to kind of keep things organized. At the time, I didn't go out and I didn't actually open up these different accounts. Well, then I came across a book, and it's meant for business, called Profit First. And again, he brought up the fact that we should have 5 to 7 different accounts for our business. Basically, everything comes in and then it gets dispersed to, you have your owner's pay account, you have your taxes account, you have your profit account, you have your operating expenses account. So you have these different accounts. That's when I officially went and I said, you know what? We need to switch the accounts. We need to switch over the accounts. So that's why I basically, the idea of having different accounts, from those 2 books or that class that I read. How many accounts do we have? We total with our bank, between my business accounts and our personal accounts, we have 13 accounts. Okay. Ricky has one account, his 401k account, outside of our bank. So I guess you'd say we have 14 different types of accounts. So within our bank, our personal accounts, we have our income checking account. Like I said, everything that Ricky gets paid is direct deposited into the income. When I pay myself out of the business, I put it in our personal income. So we have our income checking account. From there is where we transfer it to the other accounts. The second account I have is the necessities account. So like I mentioned, this is everything that has a due date comes out automatically. Now our grocery money and our gas money, we keep in our income account. We keep it separate from the ones that come out automatically, okay? So that we do. Sometimes that will still be taken out as cash, depending, if we're getting really bad on our spending habits, we might go ahead and take it out as cash, but we leave that in the income account. Okay, so we have our income checking account, our necessities checking account. Then we have our fun checking account. So any money that was designated specifically for eating out or fun goes into the fun checking account. Ricky has his own checking account. So when he has money from the budget, whether that's his personal spending money or his personal development money, it goes into his checking account. And then I have a checking account for my personal spending. Okay, so that's 5 checking accounts in our personal finance. Now our savings account. We have one savings account that we call our long-term savings account. So this has our emergency fund. This has our money for the down payment for the house, and this currently has the money for our cruise vacation that's coming up in October. In the future, we will probably separate these out. I may do another savings, and so I have a specific, vacation savings account that's separate. But for right now, that's our long-term savings. That's what is in that account. Also, what you could consider long-term savings would be saving up for a car, saving up for for furniture, things like that. Our second savings account is our freedom savings account. So this is money that we will be putting aside besides the 401k that will be invested in Roth IRAs in the future. Currently, that is on hold. We're in the process of saving for our house. So when we get into the house, then we're going to be starting to put some money. You'll see that in the future. We'll be putting money in there. So that's 2 savings accounts. Our third savings account is our giving account. So what we do is we put money into the giving account every month. That way we have money already put aside for birthdays and Christmas way before it's ready. And then every quarter, we donate a little bit of that money to a different charity. So when it comes time to spend that money, if it's for gifts, we just go ahead, and what I do is I just transfer it from that savings account into my income account. Then I can use the card or I can take out cash, however I want to do. Anything that's in the savings account, if it needs to be spent, it gets transferred back to the income account and gets spent how it needs to get spent or taken out cash. But that's 3 savings accounts. So we have 5 checking accounts and 3 savings accounts in our personal finance. So that's 8 accounts in our personal finance. For my business, I have the income account, okay? So when I get paid from YouTube, basically Google, if I get paid from Google AdSense, it's automatically deposited into my income account. If I get paid from Amazon affiliate, I used to sell books on Amazon, that would go into my income account. I'm not selling books anymore. If I get paid my commission from my travel, my host agency, that goes into my income account. Okay, so that's what goes in there. From there, that's a checking account. From there, I have the business owner's checking account. So when I get paid a certain percent of what my income is. So right now, the goal is to pay myself 50% of what my income is. I'm working myself up. Right now, I'm only paying myself 10% of what I make. So that goes into the owner's compensation. And then I have a third checking account, which is the business operation expenses, okay? So once I've paid myself, then I have 2 savings accounts I'll talk about here in a minute, and I transfer this stuff over to the savings. What's left goes into the operating expenses. And then from the operating expenses, again, anything that has a due date, it comes out automatically. So my internet comes out of there, my phone comes out of there, domain renewals, website stuff, email, anything that's, business expense comes out of there automatically. And then if I need to pay for stuff, if I need to pay for office supplies or I'm going on a business trip, then that gets paid for out of the business operating expenses checking account. So I have 3 checking accounts specifically for the business. Then I have 2 savings accounts. I have my tax savings account. So money goes into that savings account every month. So at the end of the year, because I have to pay taxes at the end of the year, see how that goes. So I have that as a savings account. And then I have my profit account. So I put in 5% of my income. So 15% goes into my tax account, 5% goes into my profit savings account. So what I do is the profit savings account is kind of like a savings buffer as an emergency fund for the business, as well as a quarterly bonus for the owner. So every quarter, I give myself half of what's in there as a bonus. So that's 2 savings accounts. So I have 3 checking accounts and 2 savings accounts within the business area. So that was, so personal is 5 and 3, okay? And then business is 3 and 2. We have 8 checking accounts and 5 savings accounts, I think. So it's 8, 9, 10, 11, 12, 13. Yeah, so that makes 13 accounts. Now, who do I bank with to allow me to have so many accounts? Do I have to pay a lot of money for that? The bank that I actually bank with Ally Bank. It's an online bank. We used to bank with Chase. Chase did not have a fee if you had a direct deposit. So Ricky's direct deposit basically waived the fee. But there's no interest on the checking, and the savings account was only 0.01, so that was pointless. So we never even had a savings account over there. I believe in certain things you had to have minimum balances. So when I decided I was going to have different accounts, T. Harv Eker mentions shop around. There are banks out there that don't charge you to have an account. You can have multiple accounts. So just if you think about it, switch accounts if you have to. So we bank with Ally. They do not have any fees. So none of the accounts have a fee associated. You do not have to have a direct deposit going into it. You do not have to have a minimum balance to keep it open. So if you notice, if I have a business income, once I transfer that money out, that account sits at 0. Same thing, a lot of times my personal checking account is at 0. So we have some accounts that are at 0 at different times of the month, but we're not charged anything. So we don't have to have a minimum balance. We don't have to have a direct deposit. There's no fees. It's great. The other bonus, because they are an online bank and they don't deal with the overhead costs of having a building, we have higher interest rates, not only in the savings, but in checking. So all of our checking accounts earn 0.10% interest, which is way higher than even just a basic savings account. And our savings account earns 1.60%, 1.6% on our savings account. When I first opened up all my accounts, I think it was 1.25%, and they keep just adding it on, which is awesome. So so we're earning more interest. We have the freedom to have as many accounts as we want. Yeah, so I encourage you, check it out. I know a lot of other people on here have been sharing they bank with, was it Capital 360 or something like that? I could be wrong. I know they have good interest. They have pretty high interest rates as well. Now, so because we are an online bank, how do we get access to our money? There are different ATMs all over the place that we have access to use at no cost. If we do decide to use an ATM that has a fee, say has a $2 or $3 fee, then we get reimbursed for that fee. So we're lucky there happens to be an ATM like right here inside the Target that we live by. So we just, when we do want cash, we just head over to Target, take out the cash, no big deal. Now if we're dealing with bigger sums of money, then usually we just use the card, or we go get a money order or something like that if we have to do something like that. Now also the accounts, everything is instant, okay? So if I need something, if an emergency comes up, I need money out of the emergency fund, I can log on real quick and transfer the money and then take it out or spend it. It's instant. Most people are going to tell you though, have your savings account at a different bank, have it so it's hard to get the money. Yes, that's true if you have no control. If you have no control, no self-discipline on spending your money, then you might have to do that. I personally, it's fine. It's still like, I don't have an ATM card for it. I mean, if I need the money, I still have to kind of budget out, find out how much exactly do I need. I still have to have access to a computer and do all of that. I don't have any of the apps or anything on my cell phone, so I do make it a little bit harder for me. I have to be physically, on my computer at home, or whatever, I can log on and transfer money over. But we have been doing this for such a long time that, like I said, we started with the cash envelope, and now that we've got ourselves under control, we have the different accounts. Yeah, I hope that answered your guys' question. I know I had some people asking, who do we bank with? Do we have fees? How are we doing that? That's kind of, like I said, we basically have 13 different accounts with the bank, business accounts and personal accounts. And I encourage you guys to start, separating out your money a little bit. It is a game changer. It definitely is. to know that, you know, your bill money is in a safe account, it's over there, and there's no way that you can accidentally spend that money on something else is great. So even if you use cash still for groceries and gas, you know, have a separate account for all those bills that have due dates. You know, your rent, your electricity, all that stuff. Keep your gas money, your grocery money in a separate account. Also, if you have his and her money, you know, have your own account, because you may not always want to have a lot of cash, or, you know, you might want to try to keep that amount going up more. And then as your personal, you know, you might get your personal money into your account, and then you might even have your own savings account, you know, your own mini sinking fund account for something specific that you want. You know, so you could even take it further. Like I said, I could even have more savings accounts specifically for different sinking funds, which we will probably add in the future. I hope the video helped you guys. Basically, that's why and how we transition from using the cash envelope to using different accounts. That's how many accounts we have, and that's you know, who we bank with and everything like that. If you have any other questions, if I left anything out that you were wondering about, please leave them in the comments below and I can address them. As always, thanks for watching, and I'll see you soon. Bye.